Get Rich Slow with John Wolf. Hey, today I want to go through just some of the basic concepts in home lending. Now, there's really only 4 questions that are going to completely determine what you qualify for, if you qualify, and what your interest rate and everything else looks like. And that's property, income, assets, and credit. One of the strangest things is that you actually have to qualify for each of those topics individually. They're sort of all their own pass-fail with a little bit of nuance. So when I ask somebody about property as a retail home mortgage lender, what am I talking about? Well, for property, I'm talking about, is it in Oregon or Washington? Is it a normal house in a neighborhood, or is it a condo, manufactured home, fourplex, or something else? Past just the loan, another really important thing about the property, which isn't exactly included when I ask people that question, but is super important and often well overlooked, is that different properties have different property taxes. And the property taxes are a huge portion of your total debt to income ratio and what your monthly payment and maximum pre-approval are going to be. So just for example, the house I'm sitting in now has about $4,000 a year taxes. 3 houses down, there's another house, takes up the same amount of space as mine, kind of looks similar. There's a little better looking. But they pay way over $7,000 a year taxes. That is a big difference to their monthly payment. Because remember, every $1,200 a year in taxes is $100 a month to your payment. That's a lot. So that's property. And an example of the property also just not working, if a home is in poor enough condition, you may not be eligible for certain loans. Now, people greatly overestimate how nice a home needs to be to qualify for a loan. In most cases, it's not that nice. But at a certain point, if there's no working electricity, things crazy like that, you won't be able to get any of the standard types of loans. Income. So when I'm asking the question as a lender of income, it's actually a few questions, just like the other one. So I kind of need to know how you make money. And what I mean is, are you W-2 paid hourly? Do you just receive a monthly salary W-2? Or are you a small business owner? And then sort of in between are all of the kind of weird things that throw underwriters off, and we have to know nice detailed explanations, such as sometimes trade workers have 12 lines on their pay stub for different things and reasons. Honestly, I can't explain why they do that, but they do, okay? It's a thing. And then there's also people who have a decent amount of their income from bonuses or commission, and that's all treated differently in the underwriting process, and it goes to the on-paper income for the loan and what their maximum approval will be, okay? And then past that, how long have you been working? Have you changed industries? Have you had a 3-month job interruption in the last 2 years? If yes, we need to investigate further. That's what that question's about. And whatever the loan program is, they have different rules, but it will be necessary to prove the income, whether that means by looking at your taxes if you're self-employed, or getting your most recent pay stubs and or W-2s if you're a W-2 worker. Now, assets is really the only one that can overcome problems on the other ones on its own. And what I mean by that is, if you have enough assets, I can make the assets count as income. If you have enough assets, I can tell you how to, in almost every situation, drastically improve your credit quickly. And with more assets, you are allowed to do different property types, and you might be allowed to buy a property at a lower condition. And I'm only talking about conforming financing here, guys. Now, assets, there's a couple categories. There's sort of money in your bank account that you control. There's gifts that you can get from eligible gift donors. And then there's also monies that you don't actually want to spend, but I'm just proving to show that you have money in reserve because certain loan programs require that, or let us treat things, again, like income differently, depending on if you have 6 months of assets to support that rental property or whatever. And the last one is credit. And the credit happens to actually be the most straightforward question. the vast majority of the time. And by credit, I'm kind of just asking you, if we haven't actually looked at your score, are there any challenges you know about? Does it look good? Is there anything you want to tell me that might be important that's not on your credit? And those are things such as, I know I owe a big student loan, but it doesn't show up on my credit. And the other things that people bring up at this stage, which are well worth talking about, are things like, past bankruptcies, past foreclosures, short sales, deed in lieu of sale. Things like that can affect your ability to purchase a home, what loan program we're going to do, and strategy. And some of those things, like especially like old tax bills or student loans, can sometimes not be on your credit, but be real to your debt to income. So the sooner we find out about that, the sooner we can formulate a good plan to get around it. And that's almost always possible. Just generally speaking, my philosophy in setting up a loan for somebody is let's do as much of the hard things up front and tackle them as quickly as possible, because then we can make the second half of the loan, when we're waiting for the appraisal and getting all the final documents here, then we can make that part easy. So anyways, I hope that this has helped explain some of the major concepts. Again, property, income, assets, credit, those are the real questions. Everything else is paperwork. Don't worry, there'll be plenty of paperwork. Have an awesome day. Bye.